to the Mortgage Rate Weekly Market Update for the week of March 10th, 2019. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you your update. Well, last week we did see mortgage bonds finally find a floor of support. We're able to rally higher and move mortgage interest rates lower. If you take a look at the bond chart on the screen, you can see we've reversed that downward trend. Now we're on an upward trend. Mortgage bonds were able to rally off a floor of support. They broke it, as you can see on that green candle. They broke below, but then were able to rally back and recover all in the same day. That started the upward trend. We followed through on Wednesday, Thursday, and then Friday. We closed right in the middle of that tough trading channel right there. And you can see that the previous highs were just below those, but every time we've hit those, the bond has been turned lower. But we are in the middle of the trading channel. We do have some room to run up. The treasuries are rated at a very key level. If they can break below that on the yield on the treasuries, that'll start a bond rally higher, which will move mortgage interest rates lower. So we're going to recommend carefully floating your mortgage interest rates start the week to see if treasuries can break below that floor, which would rally bonds higher and move interest rates lower. Now, if we dig into the economic news, big news last week was the jobs report for February 2019. It showed that 20,000 jobs were created, well below the 180,000 that were expected. So a stinker of a report there. But in the report, we saw the unemployment rate drop from 4% down to 3.8%. So how do you only create 20,000 jobs and the unemployment rate drop? Well, that's a great question. That's because we have two different surveys. The jobs report is based off the business survey, which showed 20,000 jobs created. Unemployment rate uses the household survey, which actually had a job component of 225,000 jobs created, and also showed the labor force decreased by 25,000. So jobs created, labor force decreased. That's going to give you a drop in the unemployment rate. 3.8% is a 50-year low on the unemployment rate. So contradictory jobs report in terms of jobs created and unemployment rate. So we'll have to see how that plays out. But the biggest component for us is the hourly earnings. So the average hourly earnings rose from 3.2 to 3.4% on a year-over-year basis. But the weekly earnings, which is the one we feel more important, fell from 3.5 to 3.1%. So we'll have to see if that's a trend, because hourly earnings, weekly earnings have been trending up. We could be seeing a reversal of the trend, which would not be good news for the economy. Then we saw weekly initial jobless claims come out on Thursday. Claims dropped about 3,000 to 223,000 claims for the week. Slightly higher than expectations at 220. But jobless claims remain very low, and they have been able to stabilize. They were on a run higher, but they've kind of dropped back from the high we've seen of 253, and they're back down and they're stabilizing here at the 220 range. So that's good news there. And that supports the unemployment rate that we saw dropping to 3.8%, is jobless claims trending lower. So that's good news on the labor front. Then in the housing news, a couple reports there. First one, we saw housing starts for January 2019 rose a whopping 18.6% to 1.23 million units on an annualized basis, and that was better than what the market was expecting. And that's welcome news for new home construction. We also saw building permits for January 2019 rose 1.4% to 1.345 million units on an annualized basis. These reports support our opinion that housing will continue to improve in the spring market. So it's a great time to buy. Then we saw CoreLogic release their home price index for January 2019. Shows home prices were up 0.1% from December to January, and they're up 4.4% year over year. Now, CoreLogic's predicting a solid year for housing and sees a 4.6 home price appreciation from January 2019 to January 2020. That's great news for the housing market. Our new home sales for December 2018 were up 3.7% to 621,000 units on an annualized basis. The median home price for new construction sale was $318,600. Now, this is old data because it's from December, because it was delayed by the government shutdown. Now, the total new home sales for 2018 was up 1.5% from 2017 total new home sales. So good news there again in new home construction. In the local news, we got the next free first-time homebuyer seminar on Saturday, March 16th. This Saturday in Newark, Delaware at the Christian Hilton Hotel from 10 a.m. to noon. And then the following week, we are in Wilmington on Wednesday, March 20th from 6 to 8 p.m. at Independence Mall at the eXp Realty office. Now, you can register for either one of those events. Give us a call, 302-703-0727, or online, www.DelawareHomebuyerSeminars.com. Now, we're going to be in Maryland at Hyattsville on Saturday, March 30th from 10 a.m. to noon. You can register for that event by calling us at 410-412-3319 or online, www.MarylandHomebuyerSeminars.com. Look forward to seeing you guys next week.